So we'll get through global corporations and multinational corporations for today. So that's our topic for today's lesson. So there are three global economies that are largest based on nominal GDP. So US is first, China is second, and Japan is third. So those are the top three countries based on GDP in the world and without any adjustment. So we're not adjusting for real purchasing power, which is an issue. We get a more accurate reading if we adjusted for purchasing power. But yeah, that's the top three global economies in the world. And China is growing a lot faster now. So service sector is the biggest GDP contributor. So finance, real estate, insurance, professional and business services, healthcare. So as an economy becomes bigger, the service sector is more of a contributor to economic growth. China, there so China's biggest industries are mining, construction, real estate, financial services, and retail. So growth is currently outpacing US and may overtake it based on nominal GDP in the coming years. Economy has become more open over the past few decades, so that's really good for economic growth. Standards of living have improved and increased autonomy for businesses allows for greater flexibility for market prices. Foreign and domestic trade and investment have increased. Japan, there's been strong cooperation between government and advanced technology firms, and this resulted in a strong manufacturing and export-oriented economy. So four main factors of a strong economy are human resources. So we must have educated and skilled workforce to be more productive and produce higher quality versus uneducated and unskilled workers. Physical capital, investments and improvements in roadways, machinery, factories, etc., can reduce costs and increase efficiency. Higher productivity equals increased output. So natural resources, greater quantity and availability of natural resources boosts production capacity. Technology improvements in technology means the same amount of labor can be more productive. So countries with governments that place importance on these elements and provide support in these areas will generally see greater growth. So things to consider: political, fiscal, monetary policies, trade policies, the level of nationalism, type of government can dictate market structure and regulations for business. Cultural differences. Will your products/services be a good cultural fit? It depends on the country. Economic development, more developed countries usually have more sophisticated industries. So more developed countries, they can do high-tech manufacturing in a lot of cases, and they can do a lot of services. Average family income is higher, more purchasing power and demand. Less developed countries usually have more basic industries. Lower incomes equals less purchasing power and demand. So less developed countries are more manufacturing focused and less technology focused and less service focused. Level of economic infrastructure. So usually more business opportunities in countries with better infrastructure, i.e. money and banking system, educational system, transportation and communication systems, energy systems that provide power, etc. How strong are the human resources, physical capital, natural resources, and technology factors? How much government support is given for these? So that's important too. So government support for those industries. Multinational corporations. So what are they? Any company that conducts business across natural boundaries, regardless of where headquarters are located, heavily engaged in international trade. Most successful ones consider political and cultural differences when expanding into new markets. Some are massive corporations, e.g. Exxon and Walmart, but not always. Benefits easier for large corporations to overcome trade issues, barriers for one country may not apply to other, so can ship product from that country instead or ship production to another country if needed. Easier to navigate regulatory restrictions in foreign countries. Merging with a local company in another country allows them to escape regulatory restrictions for foreign firms. Easier to deal with market shifts, can shift production of a product to something else. There's a shift in market demand. Easier to access new technology around the world, can lead to huge cost savings. Easier to save on labor costs, access to cheaper mutual funds. They take cash from a large group of investors and invest in stocks, bonds, and other securities. Shares of mutual funds are bought and sold at the end of each trading day. Money market funds are fixed income mutual funds that invest in low risk, short term debt and can be easily turned into cash. So it's mostly invested in like very low risk government bonds like treasury bills. Index funds are a type of mutual fund whose investments track a particular market index, such as the S&P 500. Exchange traded funds or ETFs are funds similar to mutual and index funds, except they can be traded like stocks throughout the day over stock market exchange. I recommend exchange traded funds over any other fund here because the fees are lower and they're easier to trade. You can buy them on the stock market instead of from a company. So I recommend exchange traded funds. They have lower fees. And the companies I recommend them from, I've talked about them before, but Vanguard, BlackRock, iShares, BMO, and TD Bank provide the best ETFs. So I recommend that. Real estate investment trusts are companies that invest in real estate, income producing properties like apartment buildings, hotels, or malls. They're often compared to mutual funds because they typically hold a selection of real estate investments. Hedge funds or pool funds for pre-qualified investors, typically high net worth individuals and organizations. They typically employ riskier trading strategies and charge high performance-based fees. So mutual funds. So take cash from a large group of investors, invest in stocks, bonds, and other securities. Shares of mutual funds are bought and sold at the end of each trading day. So that's true. The fees are the highest. I'd say out of any fund, mutual funds have the highest fees. So that's one other thing I'd say. Money market funds. Are fixed income mutual funds that invest in low risk short term debt and can be easily turned into cash? Yes. So the interest rates are low, but it's really low risk. It's the lowest risk out of anything here. Lowest risk, lowest reward. Yeah. Index funds.
Wow.
So a type of mutual fund whose investments track a particular market index, such as the S&P 500. Yes. So exchange traded funds or ETFs? So are companies that invest in real estate income producing properties like malls or properties, they're often compared to mutual funds because they typically hold a selection of real estate investments. Yes. Hedge funds. Okay, excellent. So yeah, pool of funds from pre-qualified investors, typically high net worth or individuals, employ riskier trading strategies and charge high performance-based fees. Yes. So to invest in a hedge fund, you need to be a millionaire, basically. Um, but the good thing is about hedge funds is that they don't do better on average than exchange traded funds. Exchange traded funds like the one for the S&P 500 beat over 90% of hedge funds. So if you invest in the S&P 500 exchange traded fund by, let's say, Vanguard, you'll be better than any hedge fund, almost any hedge fund out there. So it's really one of the reasons why wealthier individuals invest in hedge funds is because of the prestige. It's not because of returns, it's because it's prestige. They won't make more returns on average on hedge funds. So yeah, you'll outperform a hedge fund likely if you invest. Professionally managed investment funds that pools money from many investors. Yes. ETF stands for electronic traded fund. True or false? Why should you invest in an ETF/mutual fund? Competitive returns and diversification. Yes. A fund that has a low purchase fee. Low load mutual fund. Yes. Some investment objectives are what? Provide protection against capital loss when prices decline, achieve max capital growth. Yes. How to not predict the future performance of an ETF. Random guess, yes. How do you earn money in ETFs? Capital gains distribution and dividend income. Yes, good job. What does an ETF index show? Performance, yes. How to determine the index of an ETF? So the mutual funds are easy to work with because of automatic diversification. True or false? Mhm. True. Yes, so there's automatic diversification. And then active fund managers that pick your mutual funds are not at all pricey. True or false? Mhm. False. Yeah, they're very expensive. So mutual fund managers are very expensive. Mutual funds are expensive. So what year were index funds created and by whom? 1979 by Vanguard, yes. Do index funds have an active funds manager or are you given a flat dollar amount? So yeah, they don't have an active funds manager and you're given a flat dollar amount. Can you make multiple trades of ETFs throughout the day? Yes. When do you pay taxes for ETFs? When you sell. So you only pay when you sell. Yeah. Target date funds are for retirement, true or false? True. Target date funds provide easy diversification, low hassle, and solid asset allocation, true or false?